There are a lot of risks of dividend investing. Don't get me wrong, there are a lot of advantages too, but in this video, we're going to make sure that you're aware of the main risks with dividend investing. And make sure to stick around to the end of the video where we're going to discuss stocks that you should consider adding to your dividend portfolio. All right, let's jump right in with risk number one. This goes without saying, but like any investment, the stock can go down in value. I mean, dividend stocks are lower risk than non-dividend stocks, but that doesn't make them immune from losing value. And this risk may have a bit of a silver lining associated with it. If the stock price goes down in value, you can look to buy more of the stock and buy it at a lower price. I'm a huge advocate of buying stocks regularly and adding to your account on a monthly basis. So if you're adding money to your account and buying stocks regularly, you should have the ability to buy shares at a lower price in the event that your dividend stocks go down in value. I think it's also worth highlighting here that if the stock price doesn't change, that's also a risk. If the stock is just flat, doesn't go up in value, I think that that's also a risk. I want to see my stocks increase in value over time. You need to make sure that when you're investing in dividend stocks, that you're buying good companies that are still able to grow even though they're paying out a dividend. You want to see companies that are growing their revenues, growing their profits, and growing the business overall, even though they're taking money out of the business to pay you that dividend. Good examples of companies like these are Home Depot and Procter & Gamble. They continue to pay out a dividend and their stock price is appreciating in value over time. But let me give you an example of a stock that hasn't really declined in value, but hasn't appreciated in value much either. And it's a big dividend stock that a lot of dividend investors probably have in their portfolios. But I'm not a big fan of this stock because it hasn't really appreciated in value for many, many years. And that stock is AT&T. It is the same price today as it was in 1997, 23 years ago. I think it's amazing that AT&T is the same price today as it was 23 years ago, and it's a stock that so many dividend investors have in their accounts. Even though AT&T is the same price today as it was in 1997, you still would have made about 4.5% annually with reinvesting your dividends. But for me, that's not enough. And that shouldn't be enough for you either. You want to avoid that. You want to buy stocks that are going to appreciate in value and also pay you that dividend. At the end of this video, you're going to see a playlist of dividend investing videos that I've put together. Check that out because that includes a whole bunch of good information on what I like to see in dividend stocks that I invest in, and also a bunch of dividend stocks that I really like to buy and hold forever. And before we move on to the next risk, if you like stocks and investing, make sure to click the subscribe button, make sure to click that notification bell, and you'll be alerted whenever I put out a new video. I have 2 videos a week that are really dedicated to helping you make more money in the stock market and investing overall. And I think everyone can benefit from making more money in the stock market. So if you can, click that subscribe button and we'll work on it together. Another risk is that the company can decide to reduce or completely eliminate their dividend payments. And you can see here that over 60 companies in the S&P 500 have decreased or completely suspended their dividends this year. There are so many companies that have cut their dividends: Abercrombie & Fitch, Delta Airlines, Dick's Sporting Goods, Estee Lauder, Gap, Carnival Cruise Lines, Goodyear Tire, Las Vegas Sands, Boeing, Marriott, Ford, Darden Restaurants, Bloomin' Brands. The list goes on. Another thing to take note of here is that the last time that we saw a lot of companies cutting or suspending their dividends entirely was in 2008 and 2009, the last recession. So it's likely that if we're going to see dividends being reduced or suspended completely, it's going to come at a bad time. If you don't have an account with either Webull or Robinhood, they're both giving away free shares of stock for opening up an account with them and funding the account with at least $100. Click on the link in the description to open up an account with either Webull or Robinhood and get your free stocks. I like Robinhood a little bit better than Webull for dividend investing because they allow for automatic dividend reinvestment, and Webull doesn't have that yet, but they're both giving out free stocks. So if you don't have an account with Webull and Robinhood, Robinhood, make sure to click the link in the description below and get your free stocks. The next risk, I don't think is top of mind for most people, but it's opportunity cost. And what I mean by opportunity cost is that by putting 100% of your investment portfolio into dividend stocks, you're likely going to be missing out on other investments that are both in and out of the stock market. And maybe 100% dividend stocks is what's right for you, but just hear me out on this one. In addition to investing in dividend stocks, you may want to take a portion of your portfolio and invest that into companies that don't have a dividend, where they're taking their profits and reinvesting it into the company to drive future growth. And I think a well-balanced portfolio should have some dividend stocks, some growth stocks, and also some investments that are outside of the stock market. You may want to invest in some companies that, dare I say it, are operating at a loss currently, but they are investing in technology and in future growth, and that these companies have huge upside potential, even though they're not making a profit today. And some examples of companies like these are electric vehicle companies that don't yet have vehicles on the road, but they've made a lot of investments into the technology that's going to support those cars in the future. Another good example of a type of company that's not going to have a dividend but has really high upside potential is a drug company that has a few drugs that are in development but not any that are on the market already. They're not going to have a dividend because they're pumping hundreds of millions of dollars into research and development to bring a drug to market. But once they show really good data from a clinical trial, the value of that company can skyrocket overnight. Dividend stocks aren't really going to skyrocket overnight. They're mature companies that don't have a catalyst to drive the share price up really quickly like you do with a technology company or a drug company. Or you may want to take some of your money and move it out of the market into something like real estate. And I'm not talking about real estate like buying a home to live in. I don't consider that to be an asset. I'm talking about real estate like rental properties, where you can buy a property, rent it to someone, and generate income from that investment. And the good thing with rental properties is that you can take advantage of leverage. And with leverage, you can buy a rental property for, say, $200,000 with only $50,000, so 25% of that coming out of your pocket in order to control that property. So you have a $200,000 asset that only costs you $50,000 out of your own pocket to control that asset. This doesn't mean that investing in dividend stocks is bad. I'm actually a huge advocate of it, and I think that you should allocate a portion of your portfolio towards dividend stocks. But what it does mean is that you should also allocate a portion of your portfolio to other investments, both in the stock market and, if you can, out of the stock market as well. And if you're only investing in dividend stocks, that's fine, but just know that it might not be optimal to do so. And you might be able to generate higher returns by having more of a mix of dividend stocks, non-dividend stocks that are higher growth stocks, and potentially investments outside of the stock market. But for the dividend stocks that you do invest in, it's really important to have a thoughtful approach to picking the stocks that you're going to invest in. You want to make sure that the dividend stocks that you buy are for companies that are going to continue to grow while they're paying you that sweet, sweet dividend check every month or every quarter. Check out the videos in this playlist here to find out some of the dividend stocks that I really like, why I like them, and also how I go about thinking about which dividend stocks to buy. All right, see you in that next video. We're going to talk about 7 stocks that you can buy and hold forever. These are stocks that have staying power. The first one on our list here is